Mitchell Stankovic Associates and the Underground Ideas into Action presents The Underground Chats, authentic conversations with credit union thought leaders. Today's chat, Lead Through Change, with Bill Cheney, President and CEO of SchoolsFirst Federal Credit Union.
Hi, Bill. How are you?
I'm great, Sue. How are you? Great to see you.
It's good to see you too, and I'm doing fine. It's a crazy time, but I think we're all trying to keep our family safe and stay looking to the future. So speaking of that, how's your family? How's your credit union family? How are you doing?
Well, my family is good, thank you. My family has grown during COVID, so we have two new grandchildren. One was born right before COVID, actually, when Christy and I were in DC for GAC. Remember that, when we used to go to meetings, Sue?
Yes.
He was born on February 23rd, and then we have a granddaughter who was born April 6th. So those are two great additions to our family in 2020. And our credit union family is doing well, Sue, also. But I have to say, it's been 2020 with all the transition. The team has done an amazing job. Our branch, I can't say enough about our frontline team members who are essential workers, who are serving our members in our branches every day. And of course, with the increased cases, we've seen increased cases not only in the communities we serve, but also, of course, at the credit union, to be expected. But the team's done a great job. And, we have 1,000 people working from home, Sue. We used to have about 150 pre-COVID, but we also have people spread out and working in our operations centers and doing their best to serve our members at this difficult time. But yes, and I hope you and your family are doing well as well.
Thank you. We are. But just like you, it's been a time of extraordinary change and just every day trying to figure out. And I think pivoting according to what we wanted to accomplish and trying to stay focused on that. And you and I are both very committed to the mission and social purpose of a credit union. So absolutely. I think it wasn't just the fact that we had the pandemic, it was the idea that members needed services. And so staying true to that social purpose. And I noticed the growth with the credit union. And so throughout 2020, you've been managing not only all of the social disruption, the health disruption, but you've also grown as an organization. Yes. So can you tell us a little bit about the field of membership and your reach with SchoolsFirst?
Sure. Well, 2020 has been a big year for the credit union in lots of different ways. We started 2020 on January 1st was legal day one of our merger of Schools Financial Credit Union and SchoolsFirst Federal Credit Union. $2 billion credit union joined our organization, and we worked throughout the year on our integration. So the legal combination was one thing, but integrating our team and our systems and our products and services, and that all culminated with our integration weekend, actually over the Halloween weekend this year, last year now. And that went very well. So that's part of our growth, but also we've had all year long an influx of shares, as I know many, many credit unions have. So we ended last year just under $17 billion in assets, and we'll end, we don't have the final numbers yet, but just under $24 billion at the end of 2021. And a big part of that is a merger, but we also had about $3 billion influx in shares that were unbudgeted. It's been a great year for growth, but more importantly, it's been a great year for us to really shine our team in terms of how we're serving our members and finding solutions, because many of our members are protected in a sense in the short term because they're school employees. So you asked about our field of membership. We have what's called a TIP charter, so trade, industry, or profession charter. We serve school employees and their family members in the state of California. So we don't have any community parts of our field of membership. That's not allowed for a federally chartered credit union, at least not yet. There's some talk about that, but it's not allowed yet. And so we're very focused on the educational community. So our members are working from home. teaching remotely. Some are in a hybrid environment where they're in school part of the time and they're at home part of the time. So it's a big challenge for them. Many of our university members are working pretty much exclusively from home, but they have family members. Their family members are eligible to join. And those family members run the gamut, as you might imagine, in all different professions and vocations. And so, so many of our member households have been impacted. And we do know that, this very recent new stimulus is going to help. But it's just a very small part of what our members need to get through to the other side of this pandemic, and when we can get people vaccinated and get people back out to some form of new normal post-pandemic.
So with the field of membership and the diversity of that field of membership throughout the state of California, you've got so many hot spots in California, and obviously where you are now, but Southern California is really an issue today. But you've had to probably, the concept of pivoting, but the reality is it's really a kind of proactive, reactive scenario that you're going through. You've also got, I was looking at your data, over 1 million members? So you're affecting a big population.
Absolutely, yes. The merger did take us over 1 million members. And, it's interesting. One of the impacts of this pandemic and people working from home and needing to keep their distance, it has impacted our membership growth. We're still growing in membership, but a lot of our membership growth came from events, school employee events and gatherings of school employees, whether they be teachers or administrators or cafeteria workers or bus drivers, you name it. We have a huge, awesome membership development team that spends their time out meeting with groups of school employees throughout the state. And that all came to a screeching halt in the middle of March. And so it did impact us. Now, they've done a great job of innovating and working on virtual events, but it's not exactly the same. So we continue to grow in membership through our online channels and through our branches, but it's definitely had an impact, a short-term impact, but it's had an impact.
Well, and I think that you're well positioned and reputation-wise, it will, referrals and family members and all of that will grow.
Right, absolutely.
I'm fascinated with your field of membership being very much going through not only the day-to-day change, but they're also dealing with, somewhat controversy around should they be in the classroom, should be teaching from home. They're having to innovate the way they deliver teaching. And so the levels of stress almost requires us to be more seamless in how we respond to them. Have you guys taken on kind of a different, and not that it's a different, maybe an enhanced cultural movement in how you're dealing with member wellness?
Yeah, it's interesting, Sue. I haven't really thought of it from a cultural perspective. This week, it's interesting you ask, because this week, in addition to our board of directors, our governing board, we also have advisory boards in Southern California for Orange County and Los Angeles County, as well as for the Inland Empire. And then we've established a Northern California board of directors. And so we've been doing, and we have regular meetings, which used to be in person and now they're virtual, but they're larger groups. And so what we've been doing the last week and for the next couple of weeks is we've been having what we call coffee breaks, and they're virtual like this, but they're with our advisory board members, but in groups of 2 instead of 20 people at a time. And so just this week, there's been a community college president and a school principal on one of the calls. There's been an assistant superintendent and a teacher on another call. It's just half an hour, but it's an opportunity for us to say, hey, how are you doing? How are you getting through this? Most of them are working from home, but as I said before, for some people it's hybrid, and for some people they're still working in the classroom. So it runs the gamut, but it's such an opportunity for us to say, look, we understand how this is impacting us as a credit union, but how is this impacting you as an educator? And it's been fascinating and really eye-opening in terms of how we need to think differently about how we can help them. And so I'll give you just one example. The school funding for this academic year in California has been protected. And so there haven't been layoffs. There haven't been, regardless of what your role is at the school. If you're a school employee, it's different if you're a contractor, and we serve some of those people too, so we could talk about that. It's a smaller part of our membership, but you've been protected. But looking forward to next academic year, starting this coming fall, lots of questions still about what's the funding going to look like? What's government funding going to look like at the state level? Will there be more stimulus to help state governments and colleges and universities and school districts? And so one of the things we learned this week was they are offering early retirement to some of their employees as a way to provide opportunities for other employees who might otherwise be impacted by a reduction in funding. And so this school principal was saying, what can the credit union do to help our employees understand what their options are and what the best decision is? Well, that's why we're here, right? But we had not reached out proactively in that regard. So that gives us an opportunity to say, hey, we're here for you. We have a retirement planning team and a third-party administration team that works with school districts, and they're experts on our public retirement system, CalPERS and CalSTRS for state employees and for school employees, whether they be what we call certified or classified. And so that's a huge opportunity for us. And we wouldn't have known, maybe we would have figured it out eventually, but we wouldn't have known it in January if we hadn't asked, what can we do to help? Right? So,
yeah, and like you said, these things are popping up in response to what the need's going to be, and how proactive
right.
on their part, frankly, too. I mean, I see the business reason for it, but it's also the younger teachers and the less tenured are going
exactly.
to, have more opportunity. Yeah. When you look at the service industry that we're so impacted by here in Las Vegas, we know that we were talking to an engineer recently from one of the hotels, and he said they used to have 240 engineers, and they're now down, and they were all laid off, and they brought back about 60. So, the question really becomes, how do we redeploy on a long-term basis, even if we, start to see the pickup in growth? So when we think about this whole concept of you reaching out, I love that idea of one-on-one, by the way.
The coffee breaks, yeah.
Yeah, that's a great idea. Oh. So during the coffee breaks, you're getting, more intelligence, if you will, of what's taking place, and people probably feel more comfortable talking to you about it. What does that translate into for priorities for you in 2021?
Well, 2021, we know how it's starting. We don't know how it's going to end, right? So, and in addition to the merger last year, Sue, since that was such a big project, we had another huge project that we completed in 2020, and that was we've been going through a digital experience transformation, and so replacing all of our online and mobile banking technology infrastructure, as well as it's what our members see and use to interact with the credit union. So imagine doing both of those things in the same year. Who would ever do that? Anyway, and the pandemic. We didn't know when we didn't know when we did that we were going to have the pandemic. So
I was actually thinking that you had to have some executives going, hey, we can we might want to just step back a little bit. Yeah.
Right. And right. We also started building a new building in February, not knowing what was going to happen in March. So, you make your bets and you take your chances. You're in Vegas. You know how that works. So anyway, so 2021, a big part of 2021 is continuing to help our members through the integration. There are some gaps that we've identified both before integration and after integration in terms of things we need to do to better serve our members throughout the state of California. So we're going to be working on that. We're going to continue to roll out this new digital experience to our members where I don't know, probably about a quarter of the way through it now. It takes a while with 1.1 million members to move everybody over without creating other issues. And then, we're continuing our branch expansion, and we're continuing our investments in other technology tools to better serve our members and to allow our members to better serve themselves. And so that's all that nothing really changes in that regard. We will open our new building later this year. Hopefully we can put some people in it in the not too distant future safely. But lots of exciting things happening. And, we just continue to focus, and this, we've talked about this before, and it's a pretty straightforward way to approach credit unions. If we do what's right for our members, everything else will take care of itself, whether that's the numbers, the bottom line, growth. It all starts with the member at SchoolsFirst. And that's been the case since long before I got here.
So when you think about I'm interested in the footprint point that you made, that you're continuing to expand your branches. Are they going to be designed differently? Are you continuing with your current footprint? What's your thought there?
Sue, it's interesting because one of the things that we've talked about a lot in our organization in the 6.5 years that I've been here is how do we approach branching differently? And intuitively, it seemed to me that we should be able to operate in higher technology, lower footprint branches, less space. And it just hasn't worked out that way for us. And part of it is because of all of the different products and services we offer. Now, I'm not saying we can't ever do that, because technology continues to improve and remote delivery options continue to improve. I know I've been impressed with what I've seen from some of my peers and colleagues of what they've been able to do during this pandemic with their remote teller capability, right? They can serve their members in their branches, but their team can be remote, and we're not set up for that today. And so I've been impressed with what I've seen from other credit unions who have that technology in place. But, we're not just delivering teller cash services or transaction services. It's our platform. It's our member service people who have been such a lifeline to our members during this pandemic, still coming to the branches, socially distanced, limited capacity, wearing face coverings with the plexiglass and all the things we've done to keep people safe. But we also have our partners that we work with, whether it's on the auto lending side or our real estate team members who serve our members in our branches, or our investment advisors who are doing more remote meeting with members, virtual meetings, but we still have members who want to meet with their investment advisor face to face. And we need space for that. And I do think over time that our space requirements will become less, but I don't know what over time means anymore. I mean, we just opened a branch in Upland, California a couple of weeks ago, and it's a good sized branch. It's in the 4,000 to 5,000 square foot range versus, ideally, if you could, and you could serve your members adequately, if you could cut that in half, you could open more branches, right? And even though our members during this pandemic have increased their usage of our virtual channels quite dramatically, our branch traffic is only down, well, at one point it was down about 30%. And now it's down, depending on the week, it's either back to where we were before the pandemic or down maybe 10%. Members are coming back to the branches, even though these cases are spiking again. So.
Yeah, I find it an interesting phenomenon that the connection that members have to some credit unions is so strong that they just want to have that feeling of being in there. They know they have an alternative in how they can conduct their business. And so I'm fascinated with that, because I do believe that, people in some ways are kind of overreacting, in terms of, hey, we're gonna change everything. But I also think that the way we use the space may change. You were talking about counseling and coaching and, some of the things that may go into working with members. It may be less transaction oriented and more advisory services.
Absolutely. Yes, absolutely. And that is where the space is growing. I mean, our teller lines, for lack of a better term, are much smaller than they used to be. But the area that's growing is where we need to sit down and talk to people. And sometimes you can do that virtually, but not all the time. They want to see somebody. They want to talk to somebody. We have people who come to our branches, members who come to our branches, and they'll say, yes, I know, because we'll tell them, you can deposit this check using your mobile phone that you have in your hand. Yes, I know that, but I wanted to come to the credit union today.
Oh, it's true.
Are we gonna tell them they can't? No, we're not going to say that to our members. So.
Yeah. And you made that commitment in your team is, that's part of who they are. And, they're part of that member experience. So it'll be interesting to see as you continue down your digital journey, how that evolves.
Absolutely. Because, and this has been the case, I've been doing this credit union thing for 30 some odd years, as they say. And we were talking back in the 80s about when we aren't going to need as many branches, and what can we do to reduce the calls into our contact center. And we've introduced all of these new channels over the years. And the bottom line is, if a member loves their credit union and you give them an alternative, they want to use that. But they also want to use the things that they've always used. And so we still have members. I can't remember the last time I called an audio, a telephone. I don't even know what you call them anymore. But the audio response system.
Yeah.
We still have tens of thousands of members who call our telephone audio response system. And I thought we'd be done with that 20 years ago. And they still use it and they love it. And if there's a little hiccup, if it doesn't work for 20 minutes, I hear about it. And God bless them. I'm not criticizing them, but we need all these new channels because our members want the new stuff too, but they still want the traditional channels. And I'm sorry, but we're just not going to tell them that they can't do it. It's their credit union. If that's what they want, we're going to make that available to them as well.
Yeah, I agree 100%. And I also think that the point you made about, okay, you have ATMs, they still come in the branch. I mean, the reality is it doesn't matter whether it's home banking or, the fact that I can deposit my checks, images and so on. We have certain behaviors, and so we may use those services, but we'll use them in accordance with our own behaviors. And I'm interested to keep an eye on digital assistants and what that'll do with the Googles and the Amazons and so on, especially because when my parents passed in the last few years, but they were to the point where if that would have been an alternative, I think they would have used it. Now, I also think they would have abused it. So the idea of it fascinates me, though. Okay, so let's start looking ahead, and let's say I was thinking about 2021 when I was doing the recap of our year, and what I was, I guess, struck by is the idea that if we go back years, we see the blinding flash of the obvious, the Tom Peters concept of what it means about those things that are right in your face, like what did we learn? And then we went, aha, this is not new. This is just our way of being able to maybe flesh it out, bring it to the forefront. So, are there any BFOs for you that have happened that you're going to apply in 2021?
I think one of the things we've learned in this pandemic that I've learned, Sue, is that we can be more, and you said it's right in front of your face, right? As I said, we had about 130 to 150 what we called full-time telecommuters coming into this pandemic. And thank goodness we did, because it gave us a base of knowledge in terms of how that should work technically. But I do think we were a pretty traditional credit union in terms of, as are most, in terms of expectations of work and being in the office, and so much has changed in that regard. And as I said, now we have more than 1,000 people who are working from home or working remotely. And there's some pros and cons to that, but it's working overall. We're still serving our members. We're still growing. We're still successful. And so we are an organization that spends a lot of time gathering together to celebrate each other and talk about how we better serve our members. And I don't think that's going to change, but I do think we're going to have to be more flexible. And that was right in front of my face, and I didn't see it. Being in California, and you know this from Las Vegas, and you spend a lot of time in Southern California too, commuting is not exactly, I don't know anyone, regardless of where they live or where they work, who looks forward to commuting. Now, my commute is less than a mile today. So I live in Santa Ana, and I work in Santa Ana, California, and I live less than a mile from my office, so I can literally walk to work. But for 4 years when I worked at the league, I had about a 60-mile each way commute. And I loved my work at the league, but I can't say I ever woke up and said, I can't wait to drive to Rancho Cucamonga this morning, right? So, and why do you need to every day, 5 days a week, right? If you can work just as effectively remotely. And so it seems pretty simple, but with 2,600 team members, it's kind of a big deal.
Yeah, it's a big deal. I was looking at that when you said 1,000. I glanced down at your sheet, because that really is almost a third of your, or maybe more than a third of your workforce. Mm-hmm. And when you think about talent retention and also attraction, I agree with you. Even when I come to as you know, when I used to travel,
yes,
we would always stay close to wherever the meeting's going to be the next day, because you get caught in traffic and it's going to change your whole day. So I find that's fascinating. You're absolutely right. I do believe that those things were there, but we were somewhat resistant for a lot of different reasons. But productivity is probably one that we all look at, and I think we're starting to monitor that in a different way now. Any others?
Not so much off the top of my head. I think there will be, as we come out of this, in terms of how we better serve our members. And we can provide them with other options, but that it doesn't mean that they're going to leave the other. They want the new things, but they want to still know that the old is there. But I do think from a member service perspective, and how we're serving our members, there's got to be some. Maybe I don't see them quite yet, but doing these coffee breaks that I was talking about has been fascinating. And each one, I've done 4 of them now, and each one we learned something new. The first one that we did, it was I think she was a teacher, but anyway, she asked me, that she said she was just curious, because we offer computer loans at special rates to school employees. She said, has your computer loan business increased? I had no idea. Overall, our consumer lending took a pretty big dip. Real estate lending is going nuts, but our consumer lending took a bit of a dip early on in the pandemic. It's come back now. But in answer to her question, our computer lending in 2020 was 39% ahead of what it was the year before. Who knew? And so we don't even market the computer loan. So maybe there's an opportunity there. New products and services, home office, right? How do we help our members with home office expenses? They all had to scramble to set up whatever they could make work in a short period of time. But longer term, how can we help them with whether it's home improvement or computer loans, or just to make it easier, faster, better, cheaper for our members? To do that sort of thing. And,
I think that that's going to be something that's not going to go away. I mean, we're going to have some kind of balance, I'm sure, but being able to figure that out, and I'd be interesting as a byproduct of what you've done with all your mortgage lending, how much of that went into, I don't know about you, but we spent time doing remodels this year and doing different things because we were, once you're in your house on a regular basis, it's like, how come we haven't done that,
Exactly. Yes, absolutely.
One other thing that I will mention that I've been impressed with your credit union is that long before we had, the horrific events of 2020 in social injustice, you had established a diversity, equity, and inclusive initiative within the credit union, within your credit union, and you were driving those initiatives forward. And I think that, back to fast forward or stuff, you've been on the leading edge of industry initiatives, Bill, and I just wanted to comment on that. I think that it was in 2018 when I first met Kevin, and he talked about what he was doing and the research you were doing and some of the program components that you're putting in place. And I just want to commend you for that, because it wasn't event driven. It may have been facilitated, through what's taking place, but I just, wanted to recognize that.
Well, I appreciate that. And Kevin was a big part of starting that process. And he's obviously he's an ongoing part of leading that within our organization. But that did start in 2018. And CUNY Mutual has been a big help to us in that regard, speaking of our industry partners. And we worked with the National Diversity Council as well, and more recently, of course, with the African American Credit Union Coalition. But the bottom line, Sue, is obviously it's been 3 years ago now, but we have a diverse organization. We live in the most diverse state, arguably, in the country. We have a diverse membership. And the only way we can better serve them is to understand them. And it takes a diverse team to serve a diverse membership. And so it really gets back to member service. And thank goodness we started early, I will say that, because that's been a huge help to us as we've helped our team through this very difficult time in our country. The events around the murder of George Floyd, and then, of course, more recently around the election, it's brought our team closer together. And it was certainly helpful over the last 6 to 8 months to have that foundation already built, although that's all it is a foundation. This is a house you'll never complete, because times are changing and people are changing and our membership is changing. But it's important to have the conversations. And you've been a leader too, so thank you for that.
Well, you're welcome, and thank you. I think house is never complete. I love that.
Right.
It's the whole idea that we're going to keep on building and looking at our foundations and seeing how we have to add to it. And obviously, both of us are very committed, not only with the United States, but on the world stage, to make sure that the cooperative principles are prevalent in everything that goes on. Yes. So if you were to say to the industry right now of ideas into action, I think that we've seen all of this change in 2020, and chances are, as you mentioned, it's going to continue into the years ahead. So the question is, how do we make sure that we remain focused on members? What are the ideas and action that we need to take away from this year?
Well, I think we have a great opportunity, Sue, both in the United States and internationally, and Sue and I both serve on the World Bond Foundation for Credit Unions, so thank you for your service there. Credit unions were the original social networks. I know I've heard you say that before. I've heard other people say it. This is our time. People helping people. We have a real opportunity to lead during this time of change. I love the industry's commitment to change. We're a part of that. I know you're a part of that. Your organization is a part of that, and you personally are a part of that. And now is our time. I love the idea that Maurice Smith had and that CUNA has supported for the 8th cooperative principle. We want to be a part of that at Schools First. We should really be leading how we help our members and our team members through this time of incredible change. And what an opportunity to break down barriers of racism and create opportunities for all of our members, regardless of their background or race or color or religion or whatever the case may be, ethnicity. We should be leaders. And I've been saying for 30 years, there's never been a better time to be a credit union, but I believe it now more than ever. Let's be the change, not just lead the change.
Wow. I think it's simple words, but profound intent. And when we think about what it takes to make change, there's so much that goes on a day-to-day basis that can be speed bumps, so they can become roadblocks. I mean, it really is about keeping your eye on that destination. And as we see the world struggle with food lines and, you know, the U.S., I mean, we used to look at this as a something that would happen in third world countries, and the reality now are lesser developed countries. And now we see what we have to tackle here in our own country. And I think it's been there. I think there's some, you know, some social issues, but I really firmly believe that credit unions are not only seeing it, but they're saying we got to step in. We got to, you know, provide a way to support people. Yeah. So I think that's excellent. Excellent.
Well, and there's so many opportunities in the credit union movement to learn and grow. And, you know, the Credit Union Development Educators Program that the National Credit Union Foundation manages. What an opportunity that is. I'm not a DE, but I do live with one. So someday I'm under a lot of pressure, especially now with the virtual DE, to become a DE. But what a great program. And that, you know, that diversity, equity, and inclusion is at the core of credit union values and at the core of that whole program. And so for those of you who might be watching this who aren't, most of you probably are, but if you're not a DE, I certainly encourage you to look into that as well, because that's our future also, development education.
I smiled because I feel like you and I might be the only ones. I'm reminded on a regular basis that I'm not a DE, but my husband is, Zach is, my daughter. I mean, you know, I'm surrounded by DEs. But there was a time, this is my reason, there was a time when vendors, you know, weren't part of it, right? And so I'm so glad now that it's so inclusive. And you're right, the virtual,
absolutely.
It's putting us in a spot, dude. Maybe we sign up about the same time.
It is.